So we have a new pope. The tariffs are starting to work. The stock market is moving. The bond market is flat. I feel like the sand is coming out of my eyes. So enter the Sandman. Hey guys, it's your favorite mortgage guy, Steve Rockefeller, here with CMG Home Loans. Listen, you heard it. Enter Sandman by Metallica. You guys know, those you that don't know, they played at Virginia Tech. They've been using Enter Sandman for 25 years as the entrance for the football team. And now Metallica finally played, and I was there to witness that part of history. It was nothing short of amazing. If you look online, you'll see that there was even seismic activity because of the 80,000 people jumping up and down. It was absolutely incredible. So listen, let's talk about our segment this week. I'm going to try to keep it as short as I can, like I always do, but you've got some questions this week. So what types of loans can you provide? Steve, you talked about that last week. What did you mean by there's alternative loans out there? Okay, so in short, you have what's called a QM, a qualified mortgage, which is your typical Fannie Mae, Freddie Mac, so conventional VA, FHA, VHDA, USDA, the typical loans that you're used to. Then you have what's called non-QM, non-qualified mortgages, which is the stuff like maybe you've got poor credit. Maybe you don't have a history of being self-employed. Maybe you've got some things that might have happened in your life and we've got to do differently. Like maybe we need to use your bank statements to calculate your income instead of your actual income. Or maybe you're self-employed, but you hide your money because nobody wants to pay taxes. So we use a profit and loss loan. Or, I mean, there's just so many other things out there. You've been in bankruptcy for a few minutes. I'm being facetious when I say a few minutes. You've been in shorter than the agencies allow. These are the alternative loans that I offer. So listen, if you've got friends, family, coworkers, and they don't know, they don't understand, they don't think that they're going to be able to pull it off, have them call me. Now, I will tell you this. If you've got somebody that's got credit issues, completely different story. That's a completely different story from a different loan type. Sometimes people have such screwed up credit that we just got to fix it. And I'm just calling it out. It took you how long to mess your credit up? Well, you got to get it fixed, but I'll help you do that through one of the agencies that we recommend. So yes, all kinds of loans out there available for you. They don't have to be those plain vanilla loans. Steve, refinancing, is it time? This question comes up 5 times every week. I keep telling you, yes, I don't care if you got a 2%, 3%, 4%, 5%. I don't care what your rate is. What I do know is you went out and bought a car with an $800 to $1,200, $1,400, $1,500, $1,600 payment. You got a bunch of credit card debt and you got a ton of equity in your house. So why wouldn't you free up some of that money to improve your monthly cash flow? Who cares what the interest rate is? It is tax deductible. So take the non-tax deductible debt, reduce your monthly outlay, put it on tax deductible interest. Just call me. It's simple. I got all these software programs on this screen over here that I can run the analysis with you. Okay, construction loans, we've talked about that as a renovation loan. We talk about it the last 4 or 5 weeks. Again, short answer, you live in your house, you want to move, but you can't find what you got because you're going to have to pay a couple $100,000 more and you're going to have to do some work to it. Now you're finally agreeing, oh my gosh, I can just raise the roof on my house that I live in and add an extra floor or make a Cape Cod or put a man cave, a she shed, whatever it's called these days, out there in the backyard. That's a renovation loan. Last question. Steve, how bad is bankruptcy? Okay, so listen, talking to an attorney this week, he used the term social stigma. It doesn't come with the social stigma that it did in the past because in the past, a bankruptcy was taboo. You don't do that. It's on your credit, blah, 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 blah. Here's the way I look at it as a lender. It is your second chance to get your financial life back on track. Do I recommend people file bankruptcy? At least once a week. At least once a week. If they're qualifying for the mortgage, we go ahead and get them qualified. And then after they close on their new house, file bankruptcy because they're not going to need another mortgage for a couple of years. Is bankruptcy a bad thing? No. Is it a good thing? It's a second chance. So if you need, I can put you in touch with someone that can help you with that. All right. So welcome back to this week's market update. And we've got some interesting things to cover. So let's start with the latest news. History in the making. We've got a new Pope, Leo the 14th. And if you haven't seen the movie Conclave yet, I highly recommend it. It gives you some great theatrical insight into how the conclave process works behind those closed doors. And it's really fascinating stuff. I went on vacation to Hawaii earlier this year and I watched it on the plane. I was absolutely amazed. Well, I was amazed that we had a new Pope as fast as we had one. We got one this time, but the process is really interesting and it's a good movie. All right, let's talk about the markets. This week, we saw bonds whipsawing all over the place after the Federal Reserve Chair Powell made his comments. Now, if you caught them and you could decode that classic Fed word salad, then you know he basically reaffirmed concerns over inflation and said that they're going to keep monitoring things closely. Here's the deal. Sometimes these small comments can really stir the market pot and create confusion, or they can calm things down. This time, both the Fed chair and the president are actually in sync. Both are committed to fighting inflation and still doing a little saber rattling because they've got to hold their positions. You know, you got the president and the Federal Reserve, and unfortunately, the Federal Reserve doesn't listen to the president. I mean, not unfortunately, fortunately, because the Federal Reserve is committed to the financial stability of the country. But the Treasury, Scott Bessent, the president can say to the Treasury, go ahead and do some quantitative easing and buy rates down by selling off some bonds. Now, of course, he's my knee here. He's got to get approval, but he can get that done. Okay, call to action here. Let's talk about this. This is important. This doesn't mean you should wait because of what I'm telling you, because now you've got the perfect storm for rate improvements. And when rates drop, prices tend to rise. Why? Well, good old supply and demand. Like I always say, the best time to buy a house was yesterday. The next best time, today. But this week's rates didn't move much, I'll tell you. Thank goodness they stopped their saber rattling for the week. The stock market rallied, which is another good sign that things are slowly improving. So my advice, lock in your rate if you're closing in the next week or two. Don't look back. If you'd have bought a year ago, the rate would have been about 5/8 of a point higher. So you're fortunate that rates are down, but you probably paid $10,000 or more for the house than you did over a year ago. So don't wait. Get pre-approved now. Now, one of the last things I want to talk about is consumer confidence. People ask me all the time, why aren't people buying? These are realtors and others that bring me loans. Well, consumer confidence. Well, if you've noticed, gas prices have come down, food prices are coming down. What do people do when that happens? They take that savings and they go spend it in other parts of the economy, kind of like inflationary measures. So now they've got a little more confidence. So here's the best part. As rates start dropping, people start refinancing. They have more money because they paid off their debt. Now they're putting more money into the economy. So it's a vicious cycle. A lot of good things coming. But what I'm starting to notice is this. The agents, and I've been telling you this, they're not accepting pre-qualification letters anymore because the pre-qualification letter just says, yeah, based upon the lies that they told me over the phone, I wouldn't let him verify anything. We didn't even let him pull our credit. We think that you can buy this house. Well, nobody's taking that anymore. They want to know, we looked at credit. We checked your income. You've got money for a down payment if you need a down payment. So guys, get into the pre-approved fight because let me tell you, I've already written 3 letters today. It's 2:00. It's Friday. So I've already written 3 letters for people that are going out to buy houses this weekend because they're ready to go and they want to buy. So listen, you know me. I'm your favorite mortgage guy. All my social media is along in here. Don't forget about my podcast. You've got the voice podcast on iHeartRadio, Apple Music, Spotify. You got the video podcast on my YouTube channel, which you're actually watching this today on my YouTube channel. So you can probably look to the side and see the other ones on there, or you can just look up your favorite mortgage guy. So that's this week's update. As always, I am here to answer your questions and guide you through the process. Thanks for watching. And guys, I'll see you next week. Bye now.